the moral of the story is that the dollar is going to weaken further. You're going to see a weak dollar. You're going to see a situation where the Fed has no choice, the government does, but to print our way out of this problem, and then eventually reshore manufacturing to grow your way out over the thesis that we talked about. But it has never, ever, ever been more important because of decades of low interest rates and money printed and inflated printing and inflated asset prices. It's never been more important to understand where we are.
Fidelity says $4,000 gold possible as Fed cuts, dollar drops. Gold could hit $4,000 an ounce by the end of next year as the Federal Reserve cuts rates to cushion the U.S. economy. The dollar drops and central banks keep adding holdings, according to Fidelity International. Multi-asset fund manager Ian Sampson said the firm remained bullish on the precious metal, with some cross-asset portfolios recently increasing holdings as prices eased from an all-time high above $3,500 an ounce in April. The rationale for that was that we saw a clearer path to a more dovish Federal Reserve, Sampson said in an interview, adding that some funds had as much as doubled their 5% allocation over the past year. Also, August is often slightly weaker for markets, so more diversification makes sense, he said. Gold is up by more than a quarter this year as uncertainty around President Donald Trump's aggressive attempts to reshape global trade, conflicts in the Middle East and Ukraine, and central bank accumulation buttressed gains. Still, the metal has traded within a tight range over the past few months, with demand for havens cooling a little as some progress in U.S. trade talks eased fears about worst-case scenarios for the global economy. Fidelity's bullish outlook for gold is similar to that from Goldman Sachs Group, Inc., which has made the case in recent quarters for an eventual rally to as much as $4,000 an ounce. Still, others are cautious, including Citigroup, Inc., which forecasts weaker prices. Spot bullion was last near $3,315. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics Handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
The head of the Japan Bullion Market Association, Bruce Ikemizu, Ikemizu, formerly head of the Chinese bank ICBC Tokyo Precious Metals Desk, and now head of the Japan Bullion Market Association. He came out and said the market may already be broken. And he says London appears to have virtually no physical platinum available for delivery. He says that he thinks that there's basically no platinum in London and Zurich, and yet they're still trading nearly 3 million ounces a day of London promissory note cash contracts for immediate platinum ownership and delivery. I mean, he says something's about to break. What could possibly go wrong if you're trading 3 million ounces a day of promissory notes to deliver, and he thinks they virtually have nothing? And he says that because there's a 30% interest charge to borrow platinum. It's ridiculous. It's never been that high. He says he cannot recall a time where lease rates were even close to that high, and have rose that sharply. But when you talk about the banks that who borrow, or the producers, like recyclers, like jewelry manufacturers, industrial users, they're behind the banks. That they're the actual users who borrow from them. So why would you pay 30% interest to borrow? Why not just go buy it, flat out? And I think the frailty of the London platinum market it can very quickly just spill into the London silver market, which we've talked about, where you have lease rates at 7% for 1 month. I've never seen it that high in my career, ever. It's the same issue. They have no supply. Again, I think this is something to continue to watch. This is why I think things are changing in every way. And the rest of the world, they're wise to this, and they're kind of like the vulture circling the wounded animal, and then the wounded animal is the LBMA. A couple more things to talk about off topic. I found it interesting that Jeff Bezos has been on a selling spree since late June. He has sold $5.7 billion worth of Amazon stock. Now, if he thought that the stock market was going to go up and up and up, why would he sell $5.7 billion? This goes in line with all the other insider selling we've talked about ad nauseum. I also find it interesting talking about saving in dollars. You're destined to go broke. Well, part of what Trump wants is a weak dollar, right? If you revalue gold, by the way, what you do is you devalue the dollar. When Roosevelt increased the price of gold from 20 to 35, he did it by devaluing the dollar by 40%. He wants a weak dollar to make manufacturing more competitive. So part of bringing back the manufacturing and reshoring it, you have to have a weak dollar. Look what the dollar's done. It's fallen 11% this year. And so he wants a weak dollar. He wants low interest rates so that he can, and then ultimately, you have the stable coins front loading the short end of the market to facilitate debt. But then you peg gold to the back end to have zero borrowing costs to bring back your manufacturing with a weak dollar. He said yesterday, or the day before, that he likes a strong dollar, but you make a hell of a lot more money with a weaker one. He says, so when you have a strong dollar, one thing happens. It sounds good, but you don't have tourism, you can't sell tractors, you can't sell trucks, you can't sell anything. So he went on to say that manufacturers, would be the first to benefit from a falling dollar. Japan and China fought for weaker currencies for decades and were able to dominate markets over the years. Now it doesn't sound good, but you make a hell of a lot more money with a weaker dollar.
In today's news headlines, silver price continues to look for a bounce. The silver market continues to see a lot of noise, but on Monday, it looks like we are trying to find a floor in the market as we have sold off so drastically. The market has been very bullish until recently, so this pullback is healthy. The silver market has gone back and forth during the trading session here in early Monday trading, but what I would point out is that the market is trying to find its floor. We plunged on Friday, but since then have had a trade deal between the United States and the European Union, which, while firming the US dollar, which is typically negative for silver. The $37.50 level underneath current trading is a major support level that I think will continue to be respected. So I'm definitely going to be watching that. On the other hand, though, we may not even drop that far and we may look to the upside. The upside is, of course, going to be paying close attention to the $40 level that we tried so hard to get to but failed. The $40 level, of course, is a large, round, psychologically significant figure that a lot of people will think of as a good headline. If we can get above the $40 level, then I think you've got a potentially explosive move to the upside. But I don't think that's going to be easy to do. It's not a huge surprise right now to see the market going back and forth because we have rallied so strongly since the bottom in April. Of course, this is typical behavior, especially considering that we are in the middle of the summer and volume could be a bit of an issue at times as well. But either way, I like the idea of buying dips. This is a bullish market. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps, and check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
That these people who talk, part of their conscience comes out when they speak. They may not be fully honest, but they're telling you what they want. They want a weak dollar. He knows a weak dollar is a necessity, and that's where we're going. And the funny thing is that, look, as he goes on, as recently as 1999, the U.S. had a budget surplus and a debt of $5.6 trillion. We were widely admired, and the federal debt was bought as a monetary reserve all over the world. It isn't anymore. And, this is a problem, having a weaker dollar and lowering interest rates. So One of the things that I found very interesting, this last article I read, was how home affordability is so high, and that lower interest rates would help, and would help first-time house buyers, as an example, with cheaper money. But think about this. We're so far down the rabbit hole. This is why things have to change. If we lower rates just to allow the anomaly to continue and for prices to continue to rise, how does that help a first-time home buyer? Lower interest rates, because of the printing and the buying of bonds, would cause all other prices, like food, fuel, insurance, taxes, upkeep, everything, to rise, just like it's done in this low interest rate environment over the last decade, where asset prices have gone parabolic. And so, if they do lower rates, and all the talking heads will say what a great job they did by lowering rates, it's just going to spike inflation again. So the moral of the story is that the dollar is going to weaken further. You're going to see a weak dollar. You're going to see a situation where the Fed has no choice, the government does, but to print our way out of this problem, and then eventually reshore manufacturing to grow your way out over the thesis that we talked about. But it has never, ever, ever been more important, because of decades of low interest rates and money printed and inflated printing and inflated asset prices. It's never been more important to understand where we are going. I think that it's interesting. One last piece. You have the equities, U.S. equities now at over 50 trillion. You have gold at over 3,400. You have Bitcoin at 120,000. You got all this stuff, crypto market cap at 4 trillion. That the economy is stagnant with GDP barely up 1% on the year. So you have stock prices outpacing corporate profits, trading at 30 times earning. You have Bitcoin going to the moon, but it creates no output. It doesn't create a profit. It creates no output. It's just a higher price, right? So much of the market value we see in stocks and crypto and everything, I read an article by Bill Bonner. He calls it ghost wealth, where it's enormous on paper, but disconnected from real production or income, where you aren't creating anything for the income. It's ghost wealth, and that's dangerous. You talk about stable coins being backed by U.S. Treasuries, so you have a stable coin backed by debt? Doesn't sound too stable to me. Let's see. Annual buy now, pay later transaction volume is expected to reach a record $116.7 billion this year, double the 2022. Lending Tree survey showed that 25% of users now rely on buy now, pay later to buy groceries. I saw the article showed Adam Taggart had a piece up saying that it's being used to buy Chipotle burritos, up sharply from 14% last year, and 25% of buy now, pay later users missed at least one payment this year. Americans are piling on debt like never before. So that kind of covers everything that I found interesting over the last week. I'm sure there's a lot more, but you can sense this acceleration. I mean, things are starting to really move. And again, and I think now more than ever, people need to understand why we own gold. It is not to become wealthy. It is wealth. And it's going to back the new system. That I do believe. But being in dollars right now is really, for your financial health, the worst thing you can do. And we can see that on a myriad of metrics.
What do you think of Schectman's take? Do you agree with him? Is the big reset a reality, or is it all just bollocks? Post in the comments section down below your honest opinion and share with the stackers your gold and silver price prediction. Now, check this video right here because it's a perfect fit for you, and I'll see you on the other side.